Hello Wolfpack, this is a very important video because we've had a lot happen in the last 24 hours. What we saw was Jerome Powell, the chairman of the Federal Reserve in the United States of America, have a speech approximately 12 hours ago from the time this video released, which led to a downturn in the market. Now, what he said in the speech was essentially this. He essentially said the situation's still bad and we're still going to raise rates, right? They're not sure how much, but they're going to do it. And so the economic situation is still bad. We have reason to believe that inflation has not actually topped based on what he said in that speech. And that's why I'm speculating. That's why I think the market actually went down. Well, regardless of what he said, the market was in bearish market patterns, right? We had a bear flag. We had a massive bear flag here, actually, stemming from around June all the way through to now in August. And we had a micro bear flag, a miniature bear flag within the bear flag, as you can see here, from around August 19th through to around August 27th today, right? So bear flag within a bear flag, we dropped down. The bad news coming from Jerome Powell yesterday didn't exactly help the situation. But essentially what's happened now is, we've broken both of these bear flags to the downside. And now we're in a bit of a situation in which we're going to be testing the macro uptrending line. And we know how important this line is. This is a line that, many analysts have spoken about extensively over the past 6 months, basically, or even since November, even since the top in November, people have been talking about this line. It is a trend line stemming from 2011 through to 2015, through to 2020. And now it's been tested in June. It marked the low in June. That's very important to know, right? This trend line retesting it actually marked the bottom at 17K. And we're currently testing it once again. And so if we lose this trend line, right? If we lose this trend line, which I think is going to happen, I think we're going to lose the trend line, right? It might not be today. It might be even in a couple of weeks. But I think we will lose this trend line. And if we do, the next target is actually 17.5K. The next target is a retest of the bear market low because there's no support between here and 17.5K. At 17.5K, we not only have the support from the retest, we have the support stemming from the weekly chart in 2020, as I just circled over here. And we also have the 300-week SMA. So there is a pretty, reasonable chance that we bottom out at 17.5K. I'm not opposed to that, right? And I've been saying this for a long, long time now, ever since we tested in the first place. I said, hey, I think we're going to retest that region. I do think we're going to retest that region. And I think we're going to see it happen towards Q4, right? So Q4, for example, this is the 4-year cycle theory. And I'm going to get back into bear flag in a second, so don't worry that we need to discuss something on that chart. But the 4-year cycle theory is the date range trend that I have identified exclusively at Wolves of Crypto. I don't know anyone else who's drawn it like I've drawn it over the, 12 months I've had this chart, and it's the date range trend that I actually used as supporting evidence for predicting the top back in November 2021, and it is the evidence I have used to predict the bottom at this bear market in Q4. I think the bottom will be in Q4. Q4 is only a month away, by the way. Okay, so we're getting to the point now where, even if it bottoms out in like 3 weeks instead of 4 weeks, which is Q4, that I would consider that Q4, right? Because this is a rough date range trend. It's not meant to be precise yet. It's not precise because we don't have the data to refine it down to a precise date range. So look, if we bottom out in September, if we go to 17.5K in September, I'd seriously consider the possibility that the bottom would be in if we did that. Now, I'm not confident enough at this point to say we won't go below 17.5K. In fact, I think it's incredibly likely if we were to go down to that region at 17.5K, I'd be buying, right? I'd be buying, but I wouldn't be buying everything because I think it actually is a pretty strong chance. I wouldn't say it's super strong, but I think this is pretty, I'd honestly say it's about 50-50, right? There's probably a 50% chance we bottom out 17.5K and a 50% chance we bottom out lower at around 11.5K to 13.8K. One of the reasons why I think 11.5K to 13.8K is a strong region is because, well, it literally held support resistance throughout the entirety of the 3-year bear market. And if we drop down below an 11-year macro line, this pink line, you'd think we'd go a little bit lower than 17K, right? You'd think we go a little bit lower down to here. That's kind of my prediction on it. Now, look, when we get to 17K, it will be a lot easier to have clarity on the situation because we'll understand the macro a bit better. We need it. We need these things in real time to actually understand it. I can't say, oh yeah, we're going to bottom at 17K when I don't know what a CPI looks like. I don't know what rates look like. I don't know any of these things. It's just a blind prediction. It doesn't mean anything. So I'd rather wait and see. But what I have said for months and months, and what I'll continue to say, is the 2 zones that I think Bitcoin is most likely to bottom at is 11.5K to 13.8K and a double bottom at 17.5K. 11.5k. That's my prediction on Bitcoin. So with that said, this macro uptrending line, I'm expecting it to be lost. I'm expecting us to lose this line, right? Now, if you wanted to, and this is something you could do optional, right? If you wanted to, you could actually buy Bitcoin here. And you could sell Bitcoin if we get a weekly candle close below the macro line. That could be a little trade for you if you wanted to do that. I personally, I'm not decided of whether I'm doing that yet, to be honest. I think this macro uptrending line is weak. I think that the fact that we've, every single other time we've tested it, we've only wicked off of it one time, indicating a massive amount of strength, right? Massive amount of buying pressure at that line. The fact that we've actually seen like 7 weekly candles just kind of lurking around the region, it shows weakness to me. The fact that we had a bear flag breakdown just below us, above us, it shows weakness to me. I think we're going to lose it. But, realistically, if you wanted to, you could take a trade here. There's no problem with that. As long as you have your stop loss set below the line, as long as you're willing to sell when it goes bad, you can go ahead. But look, what I'm interested in, the reason why this is so interesting to me is because of this. Look, okay, bear flag formation. How do you measure a target from a bear flag formation? You go from the top of the just before the plunge, you measure that, and you bring it all the way down to the first retest to the bottom of the bear flag, and then you apply it. And you can either measure it from here, right, at the breakdown, or you can be conservative and measure it from the top, the last retest to the top of the bear flag, which is what I do personally. I do that all the time, right? And what you can see is that the bear flag formation, the way I've measured it, the conservative method, is actually targeting the green box at 11.5k to 13.8k. What makes it more interesting, so that's the major bear flag. It's targeting the region we've been talking about, 2019 bear market resistance region. And then what's more interesting is that if we measure the bear flag from a smaller bear flag, this miniature one over here, and we go from the top, right, to the first retest to the bottom, and measure it conservatively as we did before, that is targeting 17.5k. So 2 of the bear flags that have been playing out on Bitcoin, right, one of which for 3 months, one of which for a week, are targeting 17.5k and 11.5k to 13.8k, which are the regions we've identified as support, as the potential bottoms on Bitcoin in Q4. That's not a coincidence, right? So I think it's very, 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 very likely at this point that Bitcoin loses that macro line. Now, it could happen, in a more lengthy process than you might expect. What we could actually do, right, is we could actually keep bouncing up and using the bottom of the bear flag as resistance, and then eventually just dropping down like that. That's possible. It doesn't have to happen right now, right? We could actually find support on it for a little bit, which is why I think, if you wanted to trade it, you could. But regardless, I think it will be lost. I don't think there's really a strong argument to be made for it to be holding at this point. Now, obviously, I'm a big believer in the fact that you shouldn't be acting until something is confirmed. So I don't think you should be loading up 100x shorts right now. It's a dumb idea. Wait for it to actually be broken and then do that, right? That's just pure degeneracy, right? And I will never encourage you to act before something has happened. I'm a confirmation trader. You guys know this by now. Wait for the confirmation. Very simple stuff. But essentially, that's the situation on Bitcoin, isn't it? It's just, we've broken the bear flags, right? We're heading downwards. We're testing macro support. It probably won't hold. And when it is lost, there you go. Our Q4 bottom is essentially guaranteed at that point. And that's amazing. Do you know why it's amazing? Because if we see the guaranteed Q4 bottom, if we bottom out in Q4, that is so good for the 4-year cycle theory and so good for the long-term health of Bitcoin, right? Now, a lot of people disagree with me on this. A lot of people want the macro line to be held. Mega Whale Crypto is one of those people. I would say that it's better if we lose it, right? And I know that sounds ridiculous, but the thing is with the macro line is that if we don't lose it now, it will be lost eventually. It is a macro uptrending line. Let's see where this thing will be in 2025 in the next bear market. It will be up here at like 125k, right? So if we don't lose it now, we're going to lose it in the next cycle anyway. It's not really good for the long-term predictability of Bitcoin, in my personal opinion, other than right now at the bear market bottom. What is good for the long-term predictability of Bitcoin is the 4-year cycle theory, because it's an exact date range trend. And if it works out this time, that's an extra data point, and an extra data point will further confirm the trend that we have here in the 4-year cycle, and it will further give us further validation of the fact that we'll be seeing the next top on Bitcoin in Q4 2025 and the next bottom on Bitcoin in Q4 2026, right? It's a no-brainer. You'd love, and I think everyone should love, if they fully understand the situation, for Bitcoin to bottom out in Q4. I think if you want the bottom to be in right now on Bitcoin, I would severely disagree with you. I would say that's not the right move to make. Now, again, a lot of people disagree with me on that. I'm not going to speak for them, but I think you'd actually want to see a Q4 bottom on Bitcoin. And also, just a couple more things we need to look into. The total cryptocurrency market cap has also broken down, and it's broken down from an ascending, broadening wedge formation. Now, the interesting thing about this breakdown is this breakdown as well is actually targeting the recent support zone that it made, right, from the bear market low at 759 billion, right? So we've broken down, we're targeting 759 billion. So not only is Bitcoin targeting its macro low, the total cryptocurrency market cap itself is targeting its macro low. And if we're looking at something like the S&P 500, we have seen a sharp rejection of that yellow resistance line, and we've dropped below this support, so we can make that box red now. That is now resistance, and we are kind of charging downwards towards our next support zone, which is actually stemming at around 3,986 to around 3,950. So we've got a bit further down to go there in the S&P. We've got around a 1 to 4% drop left to have there. And I think, we'll probably just keep going down for the S&P as well. I don't think the bottom is in for Bitcoin. I don't necessarily think the bottom is in for the S&P 500. From what I've seen, I don't necessarily think the inflation top is in either, right? If it was, bond yields wouldn't be skyrocketing in the way they are right now. They're retesting their all-time highs. For example, DXY's come back up. It's retesting its all-time highs as well. Oil prices have broken a descending wedge to the upside. I think that the CPI reading that came out last month of lower CPI was a bit of a trick. I think it was trickery. I think it was foolery. Obviously, I don't have the confirmation of that. We're going to have to wait and see with the next CPI. But I think that this market was overly bullish for a period of a couple of weeks there. I think this whole kind of move, within this bear flag, it was pretty clear we were in a bearish structure. And I suppose we win again, don't we, Wolfpack? Because we've said this every time we say this, and every time people get angry at us and disagree with us and get violent in the comment section. But it's really quite simple, right? What happened here was no different than what happened in January to April, right? We saw a massive, look at this, massive bear flag. Everyone was bullish. Everyone was flipping bullish. Everyone was getting aggressive, getting defensive, right? Same thing over here. Massive horizontal channel formation, which is obviously bearish when you're in a downwards trend. Everyone was getting bullish. Everyone was saying the bottom is in. Everyone was getting angry. And the same thing happened here. Bear flag formation. Everyone was getting bullish. Everyone was saying the bottom is in. Everyone was getting angry. We were remaining objective. Now, the thing about this that does kind of, annoy me a little bit is eventually there will be the exact same bear flag structure, and by chance of luck, it will break to the upside, and then everyone will say, oh, you were wrong. But, what can you do? The amount of money we have saved people here at Wolves of Crypto is insane during this entire drop. From November 2021, predicting that almost the top at around 63K saying we should sell, and then 60K saying the top was in. Regardless of what happened next, and I think the Q4 bottom prediction will play out, by the way. I'm not trying to cover myself, but regardless of what happened next, it's been a hell of a ride, and we've remained objective the whole time, and that's kind of, a lesson to you guys. Remain objective. Don't let the emotions, don't let the, social media, the YouTube, Twitter, all these influencers who just constantly think the bottom is in, don't let them get in the way of actual analysis. This is so simple when it goes down to it. This is how simple it is. Bear flag formation, bearish. Right? Meanwhile, they'll be like, oh yeah, Elliott wave theory, X, Y, Fibonacci ratio, golden. It's really not that complicated. It's not easy, but it's not as complicated as people would like to make it seem. When someone has to go through 3 hours of analysis to convince you that the bottom is in, the chances are they're just scraping for evidence, right? Because you don't necessarily need to do that, right? That's my kind of final note there. But if you're interested in becoming a VIP member with the Wolves of Crypto YouTube channel, you can go to my YouTube homepage and you can click on the join button. This will open up a tab that shows you all of the perks you get for becoming a VIP. I'll quickly go through them now. There's 4 trading setups per week in spot and short positions, which is the main thing that people join for. Additionally, you've got prioritized reply to comments, meaning I will prioritize replying to your comments over people who are the free subscribers, the free channel members, because obviously as the channel grows, there's going to be more and more comments. I'm not going to be able to get back to all of them, and so the VIP members I will prioritize getting back to first. We've got a 2-hour lecture on market psychology, which many people have said to me is the most valuable video I have made. And then we've also got exclusive Telegram group access, where you gain access to a Telegram group in which VIP members share charts and discuss trading strategies and ideas and the signals that I post into the VIP group as well. All of that is just 40 AUD a month, which works out to be around 28 USD a month. if you're looking for an exchange to use for cryptocurrency trading and you're sick of your current exchange, or you're just looking for a better exchange, I'd highly recommend you sign up to the BitGet Exchange. There's many reasons for that. The first reason being it's non-KYC, which means it lines up with the fundamental values of cryptocurrency, decentralization on your end, which is perfect. It's also got 5 times lower fees than Binance, which is insanely cheap, which means you'll be saving a massive amount of money by trading on this exchange, which of course is one of your main intentions. On top of that, so it's 5 times less fees than Binance, it's decentralized, and on top of that, not your keys, not your crypto. That's not really a massive problem with this exchange because they've got a protection fund, which they've dedicated 6,000 Bitcoin and over $100 million into that protection fund in order to secure the funds of the users. Meaning, if something happens on the exchange and you lose your funds, it's not guaranteed, but there's a very good chance that you'll be able to recover those funds through use of the exchange's protection fund. And the last thing as well is if you sign up using my referral link, which by the way would support the channel, I would highly recommend you do that, which you can find in the description below. If you sign up using my referral link, you can gain access to a reward center as well and gain access to over 4,000 USD in rewards by completing various tasks. So lastly, I'll just say it again, please sign up using my referral link. It takes 5 minutes and it helps out the channel a lot. Thanks guys. I'd also like to give a quick shout out to the Crypto Academy. This is a course developed by myself and Megawa Crypto. We're teaching people how to trade. Become a trader. A 10-unit course is, like the title, a 10-unit course that teaches people how to become traders. We teach people how to analyze charts. We teach people how to take profitable trades, how to master TA, whatever it may be. You can go on the website and you can read a bit about this, but ultimately I'll give you a quick rundown, 10 units, starting from fundamental cryptocurrency concepts, going through to technical analysis, going through to market patterns, indicators, candlestick formations, profitable mindsets and psychology, and then finally how to find trades. We've got about 450 slides, 80 videos, 8 worksheets, and a trading diary, which means we're targeting all of the core psychological groups of how to learn things, right? We've got visual learners, we've got verbal learners, we've got people who learn using practical skills like practice. We've got many different things there. We're targeting all those groups. We've also done an extensive market analysis on what TA courses are currently available. And we can tell you right now, for the price you're paying for this course, and in general, this is the most extensive course you will find that finds all of the information relevant to teach you how to trade, gives you lifetime access after a one-time payment. So if you're interested in finding out more about the course, go ahead and email cryptoacademycourses@gmail.com and we'll get back to you with all the relevant information. Thanks for watching. Hope you enjoyed, and I'll catch you in the next one. Bye.